Hello, and welcome to our introductory course on the tax advantages of operating a small or home-based business. I think you'll see that after going through this lesson, you'll be as excited as I am to learn more on this fascinating subject and look more seriously into starting your own small or home-based business. But first, let me introduce myself. My name is John Perro. In 2001, my wife and I started our own home-based business called Original Health. Our business deals with diet and lifestyle changes and products that can dramatically improve one's health. To complement my wife's nutritional classes, we started selling a raw whole food nutritional product called Juice Plus, and in the spring of 2012, marketing a vertical hydroponic growing system called the Tower Garden by Juice Plus that allows you to grow fresh produce in as little as 4 weeks, either on your deck or patio, or in a rooftop setting, or any place where space is limited. Because we wanted to run our business in a serious and professional manner, shortly after starting the business, I took my first small business tax course from the Tax Reduction Institute by Sandy Botkin. Here, I learned about the tremendous tax benefits of running your own business. Then, in the fall of 2004, I was downsized from corporate America, where I had worked for over 25 years in high tech, and began my own consulting career in the high-tech industry as an instructional designer. I applied the same tax knowledge and strategies to my consulting business, and with our two businesses, we have legally saved thousands of dollars in taxes each year since then. Since most of you who are watching this lesson want to start your own home-based business or run your current business more professionally, my goal is to give you a brief overview of the tremendous benefits of running your own business. The goal of this lesson is to introduce you to the advantages of running a part or full-time home-based or small-based business and describe how to legally reduce your taxes and hopefully motivate you to continue to increase your knowledge in this area and start your own home-based business. At the end of this lesson, you will be able to describe why most Americans are paying too much federal and state income tax, that is, the Americans that are paying tax, dispel the 4 common tax myths, describe the 2-tier tax system in the United States, list the categories of legal business deductions, know the importance of expense documentation, discuss best practices for small or home-based businesses, and know where to get additional tax planning information and courses. Let's look at a little background into taxes. In 1913, the federal income tax was instituted. At that time, the average income for Americans was between $13,000 to $14,000 per year. The maximum tax rate for the wealthy was between 1% to 2%, which was for people making over $30,000 a year. Before 1944, because of large exemption levels, only a small fraction of individuals had to file tax returns. In 2010, the average income was almost $42,000 a year. By 1913 standards, this would mean that the wealthy would be making $100,000 today or more if we factor in inflation, and yet the country functioned just fine at that level. Today, 47% of income earners pay no federal income tax, and the other 53% pay the full bill. Those who make more than $1 million per year now pay 37% or more in taxes. I guess my question is, what's wrong with this picture? According to the American Taxpayers Union in 1958, the average American paid 18% of their gross income in federal, state, and Social Security taxes. In 2000, the average American spent 41% of their gross income in taxes, and it continues to climb today. 98% of Americans cannot retire with the same standard of living that they had when they were working. Taxes are the largest expense for most people. It exceeds what they pay for food, clothing, lodging, and transportation combined. Contrary to what some of the politicians will tell you today, the problem in America is for those who do pay taxes, many of them overpay without knowing it. It's interesting that people will spend hours and hours fighting over a $200 overcharge on their credit card or planning a vacation, and yet spend little or no time learning how to reduce their tax bite by thousands of dollars per year. The problem of overpayment in taxes is caused by a number of things. One, it's lack of knowledge. They don't know the tax code. They don't know what they can legally deduct. Two, it's lack of planning. 3, there's lack of documentation. People don't know what type of documentation they need. And the last thing is fear and intimidation of the IRS and the Franchise Tax Board, or the FTB, if you live in California. There is a saying that if you fail to plan, you plan to fail. There is no greater truth than when it comes to paying and legally reducing your tax burden. What I'm going to cover next is some of the common tax myths that people have. So just how big is the tax bite? Many people are surprised to find out how big the tax bite is. In America, we have a progressive tax system. This means that the more you make, the more you pay. The tax rates are different depending upon whether you're single, married, head of household, and so forth. Taxes are paid on adjusted net income, not gross income. This is an important term. This adjusted net income is the income after your deductions are figured in. Some common deductions are things such as mortgage deductions, sales tax deductions, charitable contributions, and business expenses. Now, the business expense is the key thing here. So let's look at the chart we have on the screen here. For example, if you're single, the tax rate is 10% on adjusted gross income between $1 and $8,375. If you're married, it's 10% up to the first $16,750. Then the tax rate jumps to 15%. For example, if you're single, anything over $8,300.76 up to $34,000 is taxed at 15%. Then if you're single, anything over $34,000 up to $82,000 is taxed at 25%, and so forth. If you're single and make over $373,650, you're going to be taxed at 35%. So you can see what we have is a progressive tax system. The more you make, the more you're taxed. The key is that the percentage of taxes is based on the adjusted net income, and that is the figure that we're going to be reducing when we can legally deduct business expenses. So let's take a look at some of the tax myths that are out there. Myth 1. I didn't make a lot of money this year, so I don't need to know about tax planning. The answer? False. If you are a consultant or you have a small or home-based business, you have access to the last great tax shelter left in the country, and this is legal. I mean, some people try to do it illegal. I'm not advocating that. What I'm advocating is get smart about it and take the last legal tax shelter that you can have. Myth 2, my home-based or my small business has to have a profit at least 3 out of 5 consecutive years. The answer to that is false. Congress simply wants you to run your business like a business and not a hobby. If you run your business as a business, you can have losses for many years. I mean, most businesses that start up don't have a profit in the first few years. And 9 out of 10 businesses that start fail in the first year. So the goal is to start your business and run it as a business and get yourself educated on what your legal deductions are and take those to your advantages. Okay, myth number 3, my accountant takes care of my taxes. Let me say this. These 7 words impoverish more people than any other myth. That's like saying that my doctor takes care of my health or my mechanic takes care of my car. My question is when do you go to the doctor? You go to the doctor when your health fails or you get sick. If you plan and you're proactive, then you can avoid having to see your doctor in many cases. That's why my wife and I are in the Juice Plus business. We're teaching prevention and being proactive in the healthcare. If your car fails and you go to the mechanic, he fixes the car. If you change your oil on a regular basis, and if you do the proper maintenance on the car, it's not going to go to the mechanic as often. And the same is true for taxes. So the truth is that the tax savings your accountant can find after December 31st are going to be small compared to with what you can save if you're pursuing your own tax strategies before December 31st. And what that means is planning is the key. Tax planning saves you money. Lack of planning will cost you thousands of dollars per year. Okay, myth number 4 is that tax knowledge won't save me that much money anyway. Oh, really? Well, if I have knowledge of health and lifestyle changes, that can improve the quality of my life. If I have knowledge about finances, it can improve the health of my portfolio. And the same is true with taxes. I mean, taxes are the #1 expense in this country. We have federal and state income tax. We have Social Security tax. We've got sales tax, property tax, gas tax, cigarette tax, alcohol tax. And then we have taxes, which aren't called taxes, but are snuck in by the politician, that are called fees. These are fees like for disposing of tires, driver's license fees, cell phone fees, etc. So the bottom line is that Americans spend more than 50% of their income on taxes. You know, there's an interesting book out there that's called The Millionaire Next Door. And contrary to the opinion that some people would like to say that all wealthy people are greedy and got their money by dishonest gains, what this book shows is that most millionaires are frugal and they live beneath their means. They also accomplish their wealth through education and hard work. So if you want to get rich, you need to keep your taxes down to the legal minimum. The other key thing here is that small businesses generate the majority of jobs in the U.S., and small businesses get legal tax deductions. In this next section, we're going to cover the two types of tax systems. Why you need to start a small business or a home-based business. The reason for that is that there are two tax systems in this country. Now, some people say, yeah, there are. One's for the rich and one's for the poor. That's not quite true. You see, one tax system is for salaried employees and for those who don't know the rules. This system is designed to take your wealth. The other is for self-employed or small home-based business owners who know the rules and take advantage of the rules. This tax system is designed to create economic growth both for you, your family, your community, your state, and even your federal government. Okay, let's take a look at the two tax system comparison. The first tax system is the W-2 or salaried employee. Now, these are the people that work for corporations that get a W-2 at the end of the year. Under this system, there's no business deductions, only the standard deductions, which are taken on the Schedule A form. These would include state income tax, your property tax, interest on house loans, charitable deductions, and so forth. And that's about it. That's about the only deductions that you can get outside of your dependent deductions. The other tax system is if you work as a 1099 or a small business owner or you're self-employed. In this situation, you get the personal tax deductions on the Schedule A, the same as you did under the W-2, and you get all business deductions, which are put on a Schedule C. The key to this is that all business expenses are dollar for dollar. That is really important, and that can really lower the tax burden. Under the W-2 or salaried employee, you get no personal IRA or HSA accounts unless provided by the employer, and some employers provide a 401k. Under the self-employed, you can set up different types of retirement plans, so you have a lot more options, and you can also set up something that's called HSAs, which stand for Health Savings Accounts. These are accounts that you can put money into that's pre-tax money, and then when you have a medical bill or a copayment or something, you can reimburse yourself out of the HSA, and you're not taxed on that. As a W-2 person, you're going to pay 6.2% Social Security, plus you're going to pay half of Medicare, so your effective tax rate is 7.65%. Your employer is going to pay the other 7.65%. Now, if you're self-employed, you're going to pay both 6.2%, which means that you have 12.4% of Social Security. Now, that may seem a disadvantage, but there's some other advantages here. Plus, you're going to pay 2.9% for Medicare. So your total tax burden for Social Security and Medicare is 15.3%. But this is only on the net profit, not on gross profit. And it's the net profit that we reduce down with our business deductions. The reality is that the effective tax rate here is 11.25% because portions of your Social Security tax are put back on your 1040 and deducted. So it's really 7.65% versus 11.25%. And when you're self-employed, you get the advantage of all the deductions. As a W-2, you have state and federal income tax that is withheld automatically. It's mandated. You don't have a choice. That money is taken out and you don't have access to that money. If you're self-employed, then state and federal income tax are paid on a quarterly basis. You estimate the taxes and pay them 4 times a year. That means that you get to keep the money and you pay it on a quarterly basis. As Sandy Botkin likes to say, you would have to be brain dead not to start a home-based business. Home-based businesses can make you better off than a second W-2 income. One of the things that you're seeing today more and more is that the traditional job security has declined over the years, and it will continue to do so, making home businesses more attractive. This is especially true since the financial meltdown of late 2007. People that work for corporations in many cases are no more secure than people who are self-employed. Plus, being self-employed gives you the satisfaction of running your own business and setting your own time schedules. You can save $2,000 to $10,000 or more per year by starting your own part-time business. And you're never going to get rich until you learn how to get your taxes down to the legal minimum. The key is knowing what to deduct and then keeping audit-proof documentation. It's not how much you make, it's how much you keep. In the next section, I'm going to give a brief overview of the types of business structures. These are the major types of business structures in the United States. There's the sole proprietorship, which is the one that we're really focusing on here. There's limited liability corporations, or LLCs, and these are usually examples of more professional groups such as attorneys, doctors, dentists, and so forth. There's C corporations and S corporations. Now, these are different types of corporations, and each has its benefits and its disadvantages. And if you're going to be setting up a C Corp or an S Corp, I highly advise you to read up and study these, and then before you form one of these, get with a corporation attorney so that you can set up the right standards and you know what the expectations are. And then again, there's nonprofit. So what we're going to do here is focus on the sole proprietorship. So what I want to do now is to cover the sole proprietorship advantages and disadvantages, because this is the primary business structure that you'll be using as a home-based business. The advantages of a sole proprietorship is that it's an unincorporated business owned by one individual. It's the simplest type of business to organize. All you have to do is go down to the bank or go online and fill out a DBA, which is a doing business under another name, and you will get an employee identification number, most likely set up a bank account, and you're up and running. The owner receives all the profits, so there's no profit sharing among shareholders. The income is taxed only once, and it's attached to the owner's 1040, and it will be recorded on a Schedule C, which we're going to cover in the next few slides. It's easy to discontinue, and it's the most popular for a home-based business. There are some disadvantages. One is that the owner has unlimited liability. This means that the individual owner is legally liable for all debts of the business. In most cases, that's not a big deal, because it's only a one or two business person anyway. It's also more difficult to raise capital. Now, if you're in a network marketing company, usually raising capital is not an issue. There's usually a low fee to get involved. If you're starting to set up a storefront business, raising capital might be a little bit more difficult. So what you will be required to do is to fill up some kind of a marketing plan, present that to some type of a bank or finance organization, and then they're going to evaluate that to see whether it's wise to loan you the money. Now we're going to get to the heart of the matter, and that is how to report business income and expenses on a Schedule C as a sole proprietor. All income from a self-employed business, which is a sole proprietorship, is reported on a Schedule C tax form, and this will be filed with your 1040 income tax form. So let's take a look at what we have on this form. At the top of the form, you'll see the name of the proprietor. This will be your business if you have a business. In our case, it's Original Health. Or it could just be your own name if you don't have a business name. You can enter in your Social Security number, or you can also enter in your employee ID number, which is something that you should get if you're going to start your business. Either one is fine. Next is the principal business or profession, and over to the right of that, you would enter the code from the instructions. Now, when you do the filing instructions, there are different codes for different types of businesses, so you want to make sure that you enter the right code for that. All of this information is online. You can go to the IRS, download the publication for how you fill out a Schedule C. Then you put in your business address, and under F, the accounting method, which is cash, accrual, or other. Normally for a sole proprietor, it's going to be cash. Then there's a few other questions that you need to answer on a yes or no basis, such as, did you materially participate in the operation of a business during 2011? And if you started or acquired the business during 2011, then you would check here. Did you make any payments in 2011 that would require you to file a Format 1099? So if you paid someone over $600, you should be filling out a 1099 for those. So these are some of the basic questions to answer on the first part of Schedule C. I might add that one of the things that is helpful in filling out this type of information is to go ahead and purchase a tax program such as TurboTax, and it'll walk you through each one of these questions. And if you have any questions on each line, it'll give you instructions on what to do. Okay, the next part of the form is Part 1, which is where you report your gross income. The gross income is all of the money that you've received during the year. This can be from merchant card and third-party payments. This would go on 1A, gross receipts from sales not entered on line 1. And at C, you would report the income reported to you on Form W-2 if the statutory employee box of that form was checked. And then you add up your total gross receipts. Now this is everything that you've earned before you start taking your deductions. Then under number 2, you'll enter in the returns and allowances. So if you had a storefront and you sold a product and that product was returned to you, this would be deducted. You don't want to be paying for something that you got back. Then you would have your cost of goods sold. Now cost of goods is anything that you buy that you turn around and sell. For example, if you have a storefront and you're buying a widget for $50 and you're selling it for $100, then the cost of goods would be $50. And this is why it's a good idea to have something like QuickBooks or some other accounting method, whether it be a spreadsheet or whatever, so that you keep track of all the cost of goods, because you don't want to be paying 1 cent more of tax than you have to. And you also want to make sure that you have excellent records if you're ever audited. On line 6, you have other income, including federal and state gasoline and fuel tax credits and so forth. You can see instructions for that. So when you finish, on line 7, you have your gross income. So you start out with your gross receipts, less the cost of goods and other expenses. That equals your gross income. Next is where we're going to enter the business expenses. And when you get down with the business expenses, this will equal your net profit or loss. In Part 2 is where we will enter our business expenses. Now this is the heart and soul of why it's advantageous to have a small business. This is where it's important for you to track your expenses on a daily, weekly, and monthly process throughout the year. Hopefully you'll be doing this on a spreadsheet or in a program such as QuickBooks so that you can enter the amounts correctly in the appropriate line. I personally keep a spreadsheet for our businesses with a column for each of these categories so that I can keep a running record of my business expenses. I know what I'm making, I know what my expenses are. This also helps me to estimate my quarterly taxes. And then when it comes tax time and I have to fill out the form, all I have to do is transfer the number from the spreadsheet over to the appropriate category in this section of the Schedule C. So here's an overview of your business deductions. I want to stress here that you need to take a small business tax course to drill down more into these items. I'm only giving you an overview here. So I'll mention some resources at the end of this presentation. So let's see what we have here. The first category is advertising. These would be sales aids, marketing expenses. These would be things to buy to market your products. For example, in our Juice Plus business, this could be brochures, CDs, DVDs that we give away. Now, one of the things that my wife and I do is that we go to trade shows and we buy sample products to give away at fairs and booths. Incidentally, even the booth that you bought and all the material for the booth is also deductible. So these would also be marketing expenses. It can also be your printing expenses for making up flyers. The next item is car and truck expenses. This is a huge big ticket item. And one of the things that you need to do is you need to keep a mileage log in your car. In 2011, the IRS rate for mileage deductions is 55.5 cents per mile. So if you travel a few thousand miles a year in your car or your truck, this adds up. The important thing is to keep that mileage log in your car. That mileage log is going to have business miles, commute miles, and non-commute miles. And you need to get in the habit of filling out this log just like brushing your teeth every time you get done with a trip. For example, you're going to say from home to client 1 to talk about the business. From client 1 to client 2 to talk about the business. From home, for example, to Costco to pick up business supplies. Now, this is really important because not only do you get business miles, but you can strategize on how you do your business miles. So let's say I have to make a trip to Fresno, which is 60 miles away, in order to do some business shopping and also some personal shopping. If I plan this right, the first stop, I want to make a business stop. So if I go from home to Costco to pick up business expenses, the first 60 miles is deductible. If I then go from Costco to do some shopping, that mileage isn't deductible, and I would put that in the non-commute section. If I then go from Fresno back home, but I stop at the bank on the way home to deposit some business checks, that mileage is deductible as well. So it's not just deducting the business miles, but it's strategizing in how you can maximize every single trip you take so that you get the maximum amount of business mile deductions. The importance of that is the mileage log. You have to get in the habit of filling this out every time you take a trip. It's like brushing your teeth. You just need to get the discipline in order to do this. The next category is commissions and fees. An example of this would be money that you paid for someone working for you. In the Juice Plus business that my wife and I run, there are fees each month on our statement that are web fees. Those are fees that can be deducted. Contract labor is another category. This would be money that you paid for someone to work for you. So here's an example of this. Let's say that you're going to have a party at your home that is a business function. You need to get that house cleaned. If you hire a cleaning lady to come in and clean the house, that is deductible. Now, you can't just write that expense off anytime you want your house clean, but if you strategize and you bring in the cleaning lady right before you're going to have an event at your home, and then you have proof that you had an event in your home, such as taking a few pictures of the displays that you have and maybe a few pictures of the meeting that you had, and then saving those photos, then you have a legitimate write-off. So it's very important to keep your documentation in your records. I have a trail for every single thing I do. The digital camera is one of the best friends that the small business owner ever had. Everything we do that's business, I'm always taking pictures. And then I'm saving those pictures in my tax folder. So if I ever get audited and they say, well, how can you prove that you had a meeting at your house? And all I have to do is show these forms, and all I have to do is show an email, for example, that I sent out to all my distributors or all my friends. There's your proof. The next item is depreciation items. Now, this is a big item as well. When you're setting up your business and you need to get a new laptop computer, that is a deductible expense. You can also deduct office equipment. If you're buying a file system, or let's say you want to get a new ergonomic chair because you're working at home, that chair may cost $150, $200 or more. That is a legitimate business deduction. Another category is insurance. Now, this is not health insurance. That's a whole separate item. And by the way, if you are self-employed and you're paying for health insurance, that is also deductible. But this insurance, for example, would be on the building, and you have insurance on that building, that is a deductible expense. If, for example, you have an outbuilding on your property and it's used for your business, the insurance that you would get on that building would be deductible, not your house insurance. The next item is a mortgage deduction. Now, this isn't your house, but if you bought a building and you're using it for business, that is a deductible expense. You have legal and professional services. If you're working with an attorney to set up a corporation, or if you're working with an attorney to get advice, or you're working with a tax professional, or anybody that's advising you in your business, that is a legal and professional service. A rent or lease. If you're renting or leasing a building, or renting or leasing equipment, that's a deductible expense. The next item is repairs and maintenance. If your computer breaks down or gets a virus and you need to take it in and get the virus cleaned, that's a deductible expense. If your chair breaks and you need to get it repaired, you can get that expense. So these are repairs and maintenance for business-related expenses. Supplies is another deductible category. Supplies can include office paper that you're using for your printer or copier, toners for your laser printers, jump drives for your PC, accessories for your PC, software for your PC, anything such as this. Any supplies that you use in your business are deductible. Another category is taxes and license. For example, if you own a building and you're paying taxes on it, that's deductible. Another example is a business license. That has to be renewed every year and you have to pay a fee for that. Once again, that's a deductible expense. Another big item is travel and entertainment. So, if you're going for a conference that's a business conference, you can deduct your travel and you can deduct your entertainment. Now, there's specific amounts of entertainment you can and can't deduct, and there's rules that go along with that. So once again, you need to know what the rules are. Utilities, if you're renting or own a building, your electrical, your gas, your heating, all of those things can be deducted. If you're working out of your home, you can also take a home office deduction. Now, some people get a little afraid about this because they've heard these rumors that if you take a home office deduction, that it's a red flag for an audit. That's not true if you have your documentation. A home office deduction would be, for example, if you had 5 rooms in your home and one of those rooms you use for your business. Now, there's specific things that you need to be aware of when you take a home office deduction, and you just need to make sure that you conform to those regulations. But you can legitimately take a home office deduction. Just follow the rules. Other expenses that you can deduct are things like your internet expenses. If you're doing business from home, you can deduct the internet expenses. Another expense is cell phone. Now, you can't deduct your entire cell phone bill. So what you have to do with your cell phone bill when you get it each month, and you want to make sure you print out a very detailed list, is that you find out what percentage of calls you made were business and what percentage were personal. And then let's say if the total bill was $100, maybe $75 is business related. So this really adds up over the year. Another business expense would be training. If you're going to training for your business or you're buying training materials for your business. For example, if you buy a small business tax course, that is a deductible expense. So not only are you getting the benefit of using it, but you're getting the benefit of deducting it. Seminar supplies would be another example. My wife puts on health classes at times, and all the supplies that she buys, whether it be notebooks or paper or even the food that's served at that event, is also tax deductible. So I just want to mention, really what you need to do is take a small business tax course and drill down into each of these categories and strategize throughout the year. And by doing this, you're going to have tremendous amounts of deductions that you can legally take, and it's going to reduce your tax burden at the end of the year. So now I want to talk about audit-proofing your business. There's 2 keys to running your business and not fearing an audit. The first is knowing your legal expenses. In order to do this, take a tax course. The course that I took was by Sandy Bakken, and his course was Lower Your Taxes Big Time. This course cost me a couple $100. It was a CD course, but I'm telling you that that course has literally saved me thousands upon thousands of dollars over this last decade. The other thing is documentation of your expenses. You need a systematic process. Now, Sandy provides off-the-shelf recording forms and templates, or you can make up your own. What I would suggest is that you get a professional package of forms, use those for a year or 2, and then once you get into the groove of this, you can make up your own forms after that. What I use is custom Excel spreadsheets, and I keep a running record on a day-by-day basis. I spend a few minutes every day filling in the expenses. If I run to the store and I get something for a business expense, I immediately call up that Excel spreadsheet, I put that expense in, boom, it's done. I don't have to worry about figuring all of this out at the end of the year. Another good resource is QuickBooks or some other type of business software. Take a class, use the software, and use it to your advantage. The key here is daily, weekly, and monthly tracking of expenses, such as car logs, travel and entertainment, business income and expenses, and so forth. You don't want to wait until the end of the year. You want to do this throughout the year. It's like brushing your teeth or disciplining yourself to exercise 3 times a week. It's just something you get in the habit of doing, and if you're going to run a business, this is the discipline that you need to do. You don't have to fear going to an audit. And let me just say this about an audit. If you are ever audited, you don't pick up all your tax records and you go down to the auditor. If you get an audit letter from the IRS, it is going to say specifically what they want to audit you on. For example, maybe they want to audit you on your mileage logs. So when you go down there, all you take is your mileage logs. If you get there and they say, oh, by the way, we would also like you to show records of X, Y, and Z, you can just say, look, I don't have those with me. We can set up another time for that. You put the burden of proof on them, and don't take a single record there that they haven't asked for. If you have to go back 5 times, then go back 5 times. Typically in an audit, they're going to ask for 2 or 3 pieces of information. When you show that you have the proof of that documentation, they're going to close the books because they're going to go after somebody else that doesn't have the records. This is why it's so critically important. Know what your legal deductions are, and then have the proper documentation. It's only going to take you a few minutes a week to really get all these records in order. And it will give you the confidence of running your business and not fearing having to go to an audit. So let's take a few moments now to talk about tips to make your small or home-based business successful. Here are 10 things you need to make a home-based business work. The first is having the proper equipment. Remember, you're going into business and you want to be a professional. One of the things that I highly recommend is a website for your business. And this doesn't have to be complicated. It can be a 1 or 2 or 3 page website. You want to have a presence up there. Today, the website is what the yellow pages were 20 years ago. People want to know where they can get additional information. And for a website, you can have a blog on that website. You can be talking about yourself. You can be talking about your business. And you can have links up there for resources or for additional information. It's essential to have a computer, printer, and the proper office equipment. You can't run a business today without a computer. And speaking of a computer, you have to have a backup system for your data and resources. You don't want to have your hard drive crash and all your records are lost and then face the IRS. Make sure that you have a backup system. And I would also recommend that you have an off-site backup system up into the cloud or the internet, so if the house burns down or a thief breaks in and steals all your equipment, including your backup drive, you're out of luck. So the best thing is to store some of your important records off-site, and that can easily be done today with a backup system that you can do over the internet. And speaking of the internet, have a high-speed internet access. A cell phone is also critical. You want people to be able to get a hold of you. With today's smartphones, literally it's like taking a computer on the road. The other thing is business acumen. You want to organize your time. Routine is one of the most important aspects of most successful endeavors. Maintain good records. Present yourself and your business professionally. Get some good business cards that you can always pass out. Have a professional-looking logo. The other thing is to network with other smart business owners. If you want to be successful, hang out with successful people. Don't hang out with losers. You can do those on your own time and your charities and so forth, but if you want to be successful in business, you want to hang out with the winners. And most of all, have a passion for what you do. The bottom line is that many of the happiest entrepreneurs are those who are running their companies from home. But the best home-based entrepreneurs are those that keep a professional edge to their business. With the right organization, presentation, resources, techniques, and attitude, you'll never have to make an excuse about being based at home. In fact, you'll have the best of everything. So let's summarize what the key takeaways are for this lesson. So the key takeaways for this lesson are: the lack of knowledge, planning, and documentation causes overpayment of taxes. In the United States, there are 2 tax systems. One is based on a W-2, which is for salary employees, and the other is based on a 1099, or those who are self-employed, who are business owners. To reduce your taxes to the legal minimum, you need to know your legal business expenses. Then, you need to have strategies to use the tax laws to legally reduce your tax burden, and you need to keep accurate records using a systematic tax diary. By doing this, running your own business will help you financially and professionally. Here are some additional resources. The course that I took was from the Tax Reduction Institute at the URL listed on the screen. Sandy Botkin, who used to be an attorney with the IRS, is the one that teaches this course. You can go out and Google other tax courses, or you can take a local business course, but this is a course that I took, so I know what's in this course. The few $100s that you invest in a course like this will literally save you thousands upon thousands of dollars over your business career. And let me say this, that even if you use a CPA for your taxes, you still have to keep your business records. So all of the information that I've talked about in this lesson is crucial. Make sure that you know what your deductions are, and make sure you have a systematic way for documenting your expenses. Then when you go to your CPA, you'll have all that information, and in reality, it will cut the amount of time that the CPA has to spend on your tax form, so it'll end up costing you less money if you do use a CPA. Thanks for taking the time to view this presentation. For more information on Juice Plus products that can enhance your life and health and allow you to grow your own freshest, delicious, and nutritious produce hydroponically on your deck or small patio through our revolutionary Tower Garden growing system, contact John and Janai Pero by emailing us at rawjuiceplus@sti.net. You can also reach us at our website at myoriginalhealth.com. And by the way, if you don't have a small business and you're looking for one to start, Juice Plus is an excellent business opportunity, so contact us for more information. We wish you a successful and prosperous business.